So I'm in Peru right now, about halfway through my trip here, and I've gotten some sun, gotten to try a lot of new foods. It's been a really good time. Today I'm going to have a lesson on trading weak signal bars. So I'm going to go talk over Friday's price action. We're going to look at some different signal bars that came up that day and why I think they should or should not be good trades to take. So just starting out looking at the open, I can see, or how I would look at the open is that there's a wedge here. Okay, a wedge is a three push pattern, and here's the first push, pull back, a second push, pull back, and then third push. Usually, you would think of wedges as having the third push being higher than the second push, but that doesn't have to be the case. The wedge uh, form is just three pushes, even if the third push is lower. So we have these three pushes up in the open, and the open is already a time with lots of reversals. So with this kind of open, this is a reversal pattern forming. It's also breaking out above the high of yesterday's range that it had right here. So we can see the bulls trying to get higher and break out above that, and they failed to, right in this area. So the bulls failed to go higher, and there's a reversal pattern happening here. And once they get below the moving average, the bulls try to go higher again, and they're unable to come drive to the moving average, and they get stopped right there. Then you get this signal bar. Let me zoom in a little more. I'm on my laptop, and it's not going to have the best recording quality, so I hope this is okay. Also with the sound quality, you can hear the beautiful sounds of traffic and honking in Lima. So if you hear some of those, that's how it sounds like here. Looking at this signal bar, this bar is not closing on its low. Now, we're talking about weak signal bars here. This is not all that weak, but maybe to some, with there being this much of a tail and bottom, they would put it into question. So what's more important? Is it the signal bar or is it the context? To me the context is more important. The signal bar is just there to draw attention to a trade setup. It's a place for you to put your stop above or below. The candlestick does not make the trade. The context is what's more important. The context that I'm seeing here is that we've had this wedge and possible opening reversal. Now the market is getting stuck below the moving average here. And because of that, I also think that the market might have a chance of doubling its range down. So we can see that the open went up to this high here, and then it went down, broke below the open of the day, and then went about a measured move of this initial range. And that's common. You'll see that quite a lot, actually. So when we're looking at trying to take a swing short somewhere in here, then that would be a good idea for a target. And that's ultimately, that is basically exactly where the market went before before the bears took their profits, and then the bulls took over. So all right, let me place the trade here. So when I was watching this live, I thought this was a really good place for a swing short. So looking at this, I'd be putting my stop one tick below this bar here. Now, about it being not the best signal bar, well, what does it have going for it? It is closing below its midpoint, and often that will be good enough if the context is strong enough. And in this case, I think it is. We've talked about the reasons why there might be a reversal going on here. It's now below the moving average. There's a target below, which is this level down here, doubling the size of the opening range. So I think there's a lot of reasons why it's okay to take a short here. And it's okay to be shorting below a weaker signal bar if the context can make up for it. Also, you could argue head and shoulders here. So left shoulder, head, and then right shoulder. So reasonable short there. And I think at a minimum, you should be trying to go for 2 times your risk, which you would have gotten out pretty quickly. No issues there, getting out at 2 times your risk. And if you think the market's going to be heading lower, well, definitely okay to try to hold on to longer than 2 times your risk. And that is one of the points I want to bring up in this video. How do you offset a weaker signal bar or context that you're unsure of? Well, one thing is you can always wait. That's okay. But with this, if you are unsure and your probability is a little bit lower, try to go for a swing trade or a larger swing trade. So I'm going to talk about that on the next trade here, and I'm going to tie that together. So the next bar I want to look at is this bar right here. At this point, we're in more of a bear trend. We can see that we have lower highs and lower lows. We've gotten stuck below the moving average. We've tested it here, here. Market tried to go up again here. This bull doji wasn't able to. Then this bar, these couple bars here, this is to me a bull trap. The bulls bought pretty aggressively here, hoping for higher prices, hoping for a breakout up and doubling of this range that we have here and doubling it on the upside. People buying there ultimately were trapped. Look at this disappointment they had if they bought this close, or if they bought when the bar was forming over here. Maybe there was some news on this bar, maybe something was going on, and they were just buying every second just because of the news, just buying, and they were buying up here, and then the market that buying kind of vanished on them. So now they're stuck in these longs up here. Then you get this bear bar, then you get a second bear bar, and a third bear bar, and if you had bought up here, then you're going to be disappointed when you start to see these 3 bear bars down. The market's still staying above where your stop would probably be, which is down here, but you're concerned, you're worried. You have a shimmer of hope here with this bull bar as it went higher, but then that buying once again kind of evaporated. Now you're stuck with this bull doji. So bulls are really disappointed. They're probably going to start exiting if there's a reason to. And then we get this bear doji here. And looking at this signal bar, I would call this a weaker signal bar. It's mostly tail on the above and below. It's a small bear body, so that's a weak signal bar. But the context, I think, is really decent. Not only are we in a bear trend, we've had this recent bull trap, and the bulls are looking for a place to exit, and they would exit below basically a bear bar, I would think. I mean, even a weak one like this, I think they're going to be exiting below that. So even though we have a weak signal bar here, the context overrides that and actually makes it a decent trade. So I'm going to mark this as well as a short. And the point I was trying to make earlier about when you're concerned about the trade having good probability, if you're a bit uncertain, one thing is you can wait, or you can increase your risk-reward ratio. So at a minimum, if you're swinging, we want to go for 2 times your risk, and you'd be out down here. That's good, that's fine. If you're concerned a little bit with the trade, if you say, it's a weak signal bar, I'm really not so sure about it, but I think there's a good chance it could be a trap and it could be heading lower. Well, what you can do is go for more than 2 times your risk. In this case, you could have easily gotten out with 3 times your risk, and maybe in 4 times your risk down here, or at least would have been close. That's option 1. Option 2 is you take off half profit at 2 times your risk, and then basically just swing the rest. So you take off half here. Maybe the market continues down, maybe it collapses down, and you have just a huge sell-off, which does happen quite often, and then that'd be huge profits from just the amount of points you'll make. In this case, probably would have gotten out above one of these bull bars here, so you would have ended up being out of your full position around 2 times your risk. But if you do leave some of your runners, sometimes the market, instead of doing this, it'll just keep on going down. and then you're stuck with a good short position, and you can make a huge amount of points from just holding that short position. 7 bull bars up here. That's good for the bulls. There are some gaps in here. I would hesitate on trying to buy during these bars, at least on the 5-minute chart, because the day has been so bearish. You can see this trend line drawn in here. And usually the first break of the trend line is not the break that works. Usually it has a deeper pullback. In this case, this bear bar was that deeper pullback. Usually it goes lower. In fact, usually it even comes down to below the lows. But in this case, this is all the bears got, was this bear bar. So we have this low here, then we get a higher low here, and then a higher low here. You could also call it a double bottom. You have a double bottom that's a higher low than this after a breakout of this trend line. And that brings me to the next trade above a bad signal bar is right here. So we have a possible double top by the bears, and then a bull doji, and then another bull doji with a body that's a little bit bigger. So we have 2 bull bars here, and I'm looking at buying above the second bull bar. So let me mark that. So I'd be interested in getting in a swing trade above this bar here. Just like our first entry, it's a bit of a doji bar. There are tails on bottom and on the top. The body's not too big. But the context, I think, is decent. It's not the strongest context, but it's decent for a swing trade. You know, and that's kind of the point of the swing trade, is that if you think you know the direction, but you're unsure of the probabilities, then that's kind of where you use the higher risk-reward ratio to offset your lower probability. So decent chance that the bulls are going higher here after these 7 bull bars, and then I would call this a test of these lows, even though it's not the strongest. It didn't pull back too far, but what it did do, it did act as a 50% pullback. It did touch the moving average, and we held above the moving average. So bulls are strong enough to do this. That means they could be strong enough to continue higher. Bears tried to sell up here and then here as a secondary short. If the market goes above a bull bar like here, the bears are probably just going to exit. So all the bears that had been shorting through here and then trying to short this and here, at some point they're going to give up, and I think they're going to give up around this area or maybe somewhere over here. So it's a weaker signal bar, but the context overrides it. And it's easy to be a little bit uncertain about taking a buy here, because you do see the sideways movement you're having, but I think the context is good for a possible trap happening here and the market wanting to head higher. So you go for 2 times your risk and you exit here, and you see you could have pretty easily gotten 3 times your risk up here. So maybe either you take off full at 2 times, or you take off half and then try to swing trade the rest higher. So those are the 3 bars that I really wanted to point out. And I think a lot of the taking trades on weak signal bars, I think a lot of that comes from just experience and studying your charts. A lot of the teaching and trading is to do strong signal bars, and with more experience and more studying, you kind of learn that the context is what was really more important, and the candlestick can only take you so far. So as you start to learn the context and really understand what the market's doing, then these other trades start to present themselves to you. So that's all I have for today. Be in Peru for about 10, 11 more days. It's been, like I said, been a great trip so far. And if you guys have questions while I'm here, let me know about the country, about Lima, and I can get answers for you, while I'm here. All right, well, I'm going to go out tonight, and you guys have a good night as well. See you guys.